Folks, last week or week before, I shared with you videos where people like Kevin O'Leary, Mr. Wonderful from Shark Tank, Elon Musk on his views about recession and bankruptcy is about to come, and I want to kind of follow up on that, on the tail of that with another data that just came on Friday, which is kind of outlaying a little bit what they're saying. Which if you remember what we said on those videos, is kind of a thing that will push or could be a good catalyst for AMC to go a little bit higher. So let me just share with you a little bit of this short video before we can continue, because this really outlays what we were thinking and what they were saying. So let's go.
We were talking about Tesla making headlines this morning after Musk said the company would look to reduce headcount by around 10%, but that trend extends throughout almost all of tech. Coinbase said that it's even planning to rescind some offer letters as growth companies look to save cash. Kate Rooney has more on what's becoming a pretty significant hiring freeze, especially with companies adjacent or dependent on crypto.
Yeah, that's right. We are starting to see some of the cracks in crypto. Coinbase extending its hiring freeze and rescinding some job offers already made to applicants. It comes 2 weeks after announcing a hiring pause. In a memo this week, executives say it's become more evident we need to take more stringent measures to slow some of that headcount growth. They talk about market conditions. It comes as Bitcoin is still down more than 50% from that all-time high. This week, we also had Gemini, the exchange founded by the Winklevoss twins, cutting 10% of its workforce, also pointing to those crypto market conditions. In a memo, they call this a crypto winter and say, we are not alone, suggesting we may see more of some of those layoffs. And across tech, the layoffs really continued this week. According to one open source tracker called layoffs.fyi, another 21 companies cut jobs this week. Last month, startups saw the highest number of layoffs since 2020. That was, of course, the depths of the pandemic. It was about 17,000 for the month of May and 21,000 for the second quarter of this year. That total is more than all of last year combined.
So as you can hear, this total is all of last year combined, and we are just beginning the 6th month of 2022. So if I share with you another article giving you details, you can see here from Yahoo Finance, a wave of layoffs is sweeping the US. Here are the firms that have announced cuts so far, from Carvana to Netflix. We have, for example, here, Carvana about to, drop 2,500 people. We have what else here? Reef, 750 employees. We have Gop of more than 400 people. Better, about 4,000 people. This is huge. Noom, almost 500 people. And then we have Peloton, 2,800 people. And then we have Thrasio, 20% of the staff. That is a lot. That is a lot. And then Robinhood, 300 people. We have Tesla also, who said 10% of the people, and then we have Wells Fargo, unknown number of people in mortgage lending, because that is also dropping significantly. And then Canopy Growth, I can go on, etc., etc. So what is the kind of the bottom line here when it comes to the link between this and AMC? Well, the thing is, we knew this when we had numbers around the GDP growth, the economy, where the direction we're going. There is a lot of uncertainty about where the economy is going, because we've never been in a spot such as this one now. And that is why some of these companies, if you kind of pay attention to, a lot of these, if not pretty much all of them, maybe except Tesla and Wells Fargo, are startup, or fintech companies. But, from the video from CNBC, this is pretty much in the tech sector, all right? The startup, the high growth, the next unicorns of tomorrow. But guess what? These are also the companies that are the favorites in the portfolios of the big hedge funds, or even the small hedge funds, because these are the companies that used to make a lot of money back in 2021 and the end of 2020. All right, for the last 2 years, these were the companies you needed to be in order to make a lot of money. I mean, look at Coinbase, look at Robinhood, look at, even Wells Fargo with the mortgage, lending, which is now dropping because mortgage rates are also dropping and mortgage applications are also dropping. So what used to work is not working anymore. So it means, on top of the market conditions, cratering for those, companies, even though, there are just small hedge funds, even for the big ones, where they put the money is not drying up in terms of stocks, holdings, and valuations. All right. So when these companies are laying off, their stock price is also cratering. The stock price is also, dropping. Why? Because if you don't have enough workforce, you can't grow as fast. So you are pretty much in a stagflation mode, and nobody like to be invested in a company that is not growing. That's why, the stock is dropping, because money is getting out. So by the stock dropping, the valuation of those shorts, those hedge funds who are also short in AMC, are possibly and potentially also dropping. All right. And with what we know is coming in terms of the Federal Reserve being very, very aggressive in reducing interest rate, it's just another pressure adding on their shoulders. And it's going to be to the point where some Monday, or maybe a Friday or a Tuesday, but someday we're going to wake up and start seeing AMC trading pre-market at 100% or 50% up. And every single day we might have 50 to 100, even more. Why? Because there's now time for them to start covering. And as this rush to the door is coming, because pretty much cornered. They've been cornered, but at some point it will be so much unsustainable that they'll have to get out. And that's when we want to be still in this play, and we want to see the 10 days. That's why personally, man, I want to see the bottom of this. It's too damn interesting. Don't you think?